Scott Bauer joins us, CEO of Prosper Trading Academy. Scott, you want to take a chance on a retailer that never seems quite to pull it off?
Well, you guys really hit the nail on the head. The retailers this earnings season have been all over the place. It's honestly been a crapshoot. You would think that fundamentally, and much to the point that you guys just made, that Nordstrom would be positioned pretty well here because they've got both ends of the spectrum. They have the higher end, they've got the Nordstrom rack, the lower end here, and some of the discount retailers have been doing really well. But if I look at this chart here, there has just been a series, Oliver, of lower highs and lower lows. So technically, it's pretty weak. And, as you said, in the past, Nordstrom has always kind of failed to live up to these expectations. Is that the reason why I want to be bearish here? No, the reason I want to be bearish is really more technical than anything else because of that chart pattern I'm talking about. So going into the print, I am buying next week's, the December 3rd, 30-27 put spread, $3 wide, pay about 75 cents for that. Great reward to risk. 26 to 27 area is some pretty decent support in the stock here. Listen, if they wind up reporting, really good numbers and more importantly, give decent guidance, stock might go up from here. But I really like a downside play here. But as always, I am completely limited in my risk. The most I can lose here is 75 cents. And I think this put spread really offers good bang for your buck.
Okay. So basically, Scott, you're looking at an opportunity here to play a stock that has been trending long-term downward, but maybe can get some two-way action around this report. I mean, we are basically sitting right where we started the year. I mean, like to the nose. This is where Nordstrom opened up 2021.
Absolutely. And you know what? More so than maybe many of the other retailers going into these third quarter earnings, I think this one's really a coin toss. I really do, both fundamentally and technically here. But again, if I look at the charts and I see that pattern of these lower lows and lower highs here, it really makes me want to take a bearish position, which I'm doing, but again, with 100% limited risk.
All right, 100% limited risk and downside too that gets capped if the thing really gets blasted, right? I mean, you're looking for just a little bit of a drift, not so much an explosion.
Yeah, exactly. I mean, anything below 27 here, this thing's going to cap out at a maximum value of $3. But when I evaluate my reward to risk or the bang for the buck I'm getting here, I'm investing 75 cents. This thing can go to $3. So my reward on this could be $2.25 or 3-to-1 reward to risk. I really like that potential payout.
All right. Scott, looking at what we saw in Macy's and the others, I mean, you're kind of going against the recent grain here, which has been a little bit of a pop on the response to these earnings. Not necessarily a big follow through, though. We saw it fade in TJ and we saw it fade in Macy's.
Yeah, and cold stores also. So again, it's a little bit of a coin flip here because of the spot that they're in. They're covering both the high end and that discount side of it. I think even more so than Macy's is. We'll see what happens here, but I like my chances. Okay.
All right. So the put spread in Nordstrom. Scott, while I got you, let's talk a little bit real quick, if you will, on the big picture. Yesterday, we saw a market that seemed to have a little bit of trepidation around Mr. Powell in charge and the potential for what that means. What do you think? Have we officially crossed over into a post-COVID dynamic where Jay Powell no longer associated with the money printer, or what?
No, I think he's always going to be associated with it. However, overall, the market likes certainty. The market does not like uncertainty. So going into yesterday's announcement, maybe Brainerd had I don't know, maybe 10, 20% chance of being, nominated. But the bottom line is, because Powell is nominated and it certainly, he has to go through the process, but it's likely that he's going to be in that position again. The market liked that. The market realizes that he is accommodative, but the monetary policy overall is probably not going to shift. He will pull the trigger on raising rates or accelerating that curve if inflation continues to accelerate and get out of hand. But the market likes consistency. It really does. So I think that's why we saw that initial pop in the market yesterday, sell off towards the end of the day because honestly, I think we got too much of a pop, and it's a holiday week with light volumes, and we typically will get a lot of gyrations when that happens.
All right. Scott, thank you, sir. Good stuff. And nice trade, looking at a little downside for Nordstrom into the report. Scott Bauer, CEO of Prosper Trading Academy.